Welcome to the second season of The Flow, the podcast on crypto market structure with industry leaders. We discuss the current and the future events in crypto space. And if you like the show, please like it, subscribe, and share with your colleagues. If you have any questions, please post them below. We'll love to hear your feedback, and we'll be happy to respond. And if you have questions for our participants, please mention that as well. In today's episode, we're switching things up a little bit. Throughout the first season, Konstantin was hosting the podcast, and today we're going to flip the chairs. I'm going to be hosting the podcast, and Konstantin will be answering questions. My name is Leo Hmelnitsky. I co-manage a boutique venture capital fund, and we were early investors in Finery Markets. Konstantin and I met almost 10 years ago when we were trading international equities, when I was the head of global equity trading at BNY Mellon, and Konstantin was my coverage. I was very impressed by your professionalism, Konstantin, and by your knowledge of the markets, ability to explain it, and ability to serve client needs, and very being focused on what the large institutions at the time needed in the DR and international equity space. It has been a pleasure to serve as an advisor to you, Konstantin, and to Finery Markets, be an investor, and I also work as a chief strategy officer at SpotX, an established FX and digital asset ECN, which mimics some of the function that Finery Markets does. So without further ado, here's the first question. Konstantin, let's start with basics. How did you transition from electronic trading into the crypto market?
Well, first of all, Leo, it's a great pleasure to have you as our host and as an advisor. As we all know, you wear several hats with us, as a friend, as an advisor and investor.
Thank you.
And I think it's been over 10 years already that we've known each other. So it's been quite a journey. I think overall I've spent 15 years in the electronic trading space across most of the asset classes like equities, FX. And what really drives myself and my co-founders is that digital asset space is the most global and the most fragmented asset class.
Right.
So if there's ever a challenge in the market structure, it's definitely within the digital asset space, and basically that was driving us to start Finery Markets.
Well, I agree. And international equity and ADRs, GDRs that we've traded with you 10 years ago were quite exciting. But obviously, crypto market brings a total new level of complexity. So the question is, what keeps you and your team motivated in this highly volatile market?
Well, that by itself, I guess, keeps the entire team quite motivated with all the regulatory changes,
right,
with the bear markets and the bull markets. And it seems that time flies in digital assets 5 times faster than it's happening in the FX and equities. And this, I think, is a great stimulus for all of us. So we're trying to build for the future. When we just started 5 years ago, I think we were probably a little bit early to the game with trying to bring some of those best institutional and traditional, or how they call TradFi practices, into the digital asset space.
Right.
But I think this year in particular, and we're filming this in the US, which I think is just exciting times with everything what's happening in the country, and overall, I think it's just perfect timing for the institutional adoption, and this also keeps us quite motivated to build for the future.
Well, I'm glad to hear that. We're obviously going to talk more about the regulatory landscape, but for the time being, I admire your business leadership and your salesmanship. I think you're a great leader, and curious to hear the 2 books, if you can name, one about electronic trading and one about what makes a great leader. Just your recommendations.
I actually did think about those 2 for quite some time, and I think what's driving some parallels, and I'll start with a non-electronic trading book, which was quite important for me back in the days when I was a student, and that's a book by Ayn Rand, The Fountainhead.
Right.
I'm not sure if you read this one.
Sure.
I strongly advise to read it, but I think in the crypto space, there are a lot of maximalists today. And being honest, I'm not a Bitcoin maxi myself. I'm more of a pragmatic person trying to just build not only for the maxis, but for the real world use cases that will help ordinary people. But within the book, it is important to like to stand with your principles. And if you believe in something, you can actually dedicate your entire life, even if most of your peers or most of the market is against you. And I think that's a great symbolism that I think has a lot parallels with the crypto industry in general. Like 10 years ago, it was definitely not the mainstream. Even 5 years ago, like no one would believe that the BlackRock would have like billions in its Bitcoin ETF, but that's exactly what's happening today. So I think it's just a great parallel. And
not just billions, but will be the largest, the fastest growing
exactly
ETF. The fastest growing ETF, not the largest.
Who would imagine? I mean, that's truly unbelievable if we think like 10 years back from now. And the second one, the book, which like lots of industry leaders, especially those who have deep knowledge in the space, they're being quite critical about the book. But I still think that if you're maybe new to the industry and you want to have a good reading, but also have some understanding on the market structure, I would definitely recommend to read Michael Lewis, and in particular, The Flash Boys. And so, once again, like that book has a lot of exaggerations. I mean, it might not be as precise. Exactly. But I think it's just exciting reading for someone who wants to learn more about our industry and then just challenge the book as most of our peers do. But I think this just helps to bring awareness and adoption into the space.
I would agree. Michael Lewis is definitely a very engaging author, don't take everything he writes. Take it some with a grain of salt, but I think it's a great learning exercise. Well, going back to the history, I started my career during the Reg NMS, Regulation National Markets Structure, and Reg ATS, where the duopoly of NYSE and NASDAQ exchanges was crumbling. And the emergence of ATSs, alternative trading systems, and ECNs. It feels like we live in the same environment and reliving deja vu, but we're progressing on steroids. It feels like everything is moving much faster. And again, we have the ECNs emerging and challenging the centralized exchanges. How do these major changes affect Finery Markets, and what do you notice in overall in market structure?
Well, as we just discussed, like crypto industry is probably the most dynamic industry in terms of the capital markets, and everything changes like so quickly. But some things are pretty stable. And when we just started 5 years ago, and Finery Markets was the first digital asset ECN, like a crypto native ECN in the space. And we were trying to explain what Finery Markets is 5 years ago. I remember explaining that we're like an electronic OTC marketplace, and some crypto native clients, they were like, are you guys building a Telegram chat, or are you accepting orders via Slack in an electronic form? So like, we're saying that it's a bit more complex than that. It's like a low latency C++ with like tens of thousands of orders processed per second. So that definitely changed, like the perception changed. I think what really helped is the FTX case. Before that, people really didn't care about the conflicts of interest that can be bared on the same umbrella, like an exchange, a broker, a custodian, and a market maker. That creates tremendous amount of conflicts internally. And when it happened, I think this was a pivotal moment for the industry and for ourselves. Like the most recent Bybit hack, even though it has completely different roots, but still, I think the industry realized that you should probably separate and debundle the custody part, the clearing part, the execution part. And that's exactly what we're preaching for from day one.
Yeah, I think the collapse of the FTX really brought to the forefront the need to unbundle the services, the custody, the execution layer, the prime brokerage services need to be unbundled. And I think the industry has moved into that direction very aggressively. With accelerated adoption by the institutions, where do you see Finery Markets' position? And do you anticipate changes the Finery Markets as an ECN plays, the role that it plays right now?
Of course, I think what also excites me is crypto industry is quite unique in its development and emerging. Even though the ECN model is quite traditional for the FX.
Right.
Crypto developed in a way different format. Like FX industry emerged from banks being the largest market makers and the dealers. And then like on top of that, we had electronification of the industry, which turned into fragmentation. More brokers had access to the market. And then we had ECNs that actually connected all of those market makers. And then once again, the non-banking market makers arrived into the space. And that's how we ended up into the existing market structure in FX. In crypto, it was completely different. Like it all started with retail adoption. It started with some peer-to-peer retail platforms like local Bitcoins. Then we had those retail exchanges that once again, that were not just exchanges. They were like the brokers and exchanges all at once. And as of today, we do have like hundreds of exchanges. Every one of them at least claim they have their own matching engine and their own central limit order book. So we don't think, and I personally don't think, industry needs hundreds of matching engines. And this, what I think Finery Markets has to offer to the global market. We want to power the price discovery across most of those exchanges that call themselves so that they can pivot into being brokers and actually outsource the matching component and the price discovery to Finery Markets. And this is exactly the offering. So we're not just the ECN, we also provide like SaaS, we call it ECN as a service. And all those regional brokers, exchanges, and OTC desks can actually benefit from a pretty deep liquidity and like a bespoke matching engine.
And I think the fact that ECN can offer not only the matching engine itself and the primary market sort of price discovery, but also the service of, broker being able to onboard directly into the ECN and run their business. I think that's a great, very solid offering.
Exactly.
And we see the same thing happening, as you mentioned, on CEXs, on the centralized exchanges, with Kraken announcing, I think yesterday, that they bought the NinjaTrader. They're clearly moving into that role of a broker.
Exactly.
Allowing retail customers to trade.
I think, like we started to share those ideas like a few years back, telling that like, if you're running an exchange, you're still competing with brokers. Why do you want to compete with two different, completely different product lines, like being a broker and trying to acquire as many retail users, but at the same time maintaining a liquidity pool which is competitive and needs to stay competitive with all the tier one exchanges? Like it just doesn't make any sense. If you're good at acquisition, I think you can keep that and then utilize the liquidity which is either sourced from tier one exchanges or like the ECN model, which is just way more efficient. And I think more and more exchanges like Kraken will be shifting into the space. More and more traditional brokers will shift into crypto. And I think only those will survive that will identify their core focus. Like if their core focus is working with retail, providing great user experience, I think they should definitely get rid of those like matching components. I think it can just slow down their development. And why would they do that?
I think the unbundling of these services will continue, hopefully. And again, the value will be centralized in both exchanges doing what they do best, and then matching engines and the ECNs.
Of course, it's a survival question. I mean, if you are not debundling, if you're not identifying where you're best at, and you're trying to run everything at once, then the case that you will be losing towards like the players that are doing those bits and pieces better than you. I think the chances are pretty high. I just can't imagine NYSE opening up, for retail clients to open up an account directly on NYSE instead of trading through brokers. Why would you? Why would you do that?
Well, shifting gears, according to the OTC market structure report that you recently published, 40% of institutional LPs expect year-over-year spot volumes to increase over 60% in 2025, which is fantastic, for the industry. Do you anticipate that this growth will be driven by the ECNs, like Finery Markets or SpotX, or is it really going to come back to the centralized exchanges?
I think the entire market structure is definitely changing. So if we're talking about largest tier one exchanges, they will definitely remain. They will diversify and will be trying to compete with traditional brokers. But if we're speaking about like this longer tail of smaller venues, there's just no way they will be existing in the next like 5 to 10 years as a standalone matching engines.
Right.
So most of that liquidity will shift towards OTC. And I think ECNs are the key beneficiaries of that shift and that movement.
Agreed.
So of course, the overall market is growing. Like with more institutional adoption, the overall pie of those trading institutions will grow. But even within the existing market segment, the share of centralized exchanges will be decreasing towards OTC. And it will also be interesting to see the adoption of like decentralized exchange trading, because we all know that their share is also growing quite rapidly.
Right.
And I think there will be some hybrid model between OTC and decentralized that may be used for the clearing part. And I think like intent-based DEXs are also bridging that gap, and we as Finery Markets are already doing some R&D on that front.
Fantastic. Well, we're going to shift to the regulatory landscape a little bit, but I promise to talk more about this. And obviously, there's a lot of exciting news. I mean, the landscape has started to shift with a new U.S. administration. We had the rescind of SEB 121, which removed the barriers for traditional custodians to hold crypto assets. It's not a liability anymore. They're allowed to participate in this. And we saw not only BNY Mellon extending beyond the Bitcoin and Ethereum, but also State Street and Citi announcing that they're going to join the digital custody. OCC issued a statement recently relaxing the rules for the federal banking system to in regards to the stable coins. So now the brokers can actually trade stable coins. And I think Brian Moynihan commented that Bank of America will be ready to start trading digital assets. At the recent interview on the CNBC. So, as soon as U.S. regulators give the green light, I think we're going to see a lot more volume coming from the traditional brokers. Well, all these, crypto-friendly regulation changes in U.S. and in European Union, do you think the traditional retail-focused brokers, like FX brokers, Charles Schwab, do you think they will start participating in the digital ecosystem? And what role could they play in creating a mass adoption at a much broader scale?
Well, the short answer to that is yes, of course. Like every single broker needs to have a digital asset strategy. Otherwise, they'll be just losing competition. And that's exactly what's happening already. Like Binance is probably the largest threat to any traditional broker because they're like so huge. They offer great user experience, but right now they're only limited to digital assets in most of the geographies. But the day Binance started to offer traditional equities, or like CFDs or FX or commodities, I think that becomes a major threat. So no one wants to be disrupted, or at least they should be concerned about being disrupted, and they should be proactively either applying for regulations in the digital asset space. And I think 25 will be quite important to like crystallize the regulation, whether you will need an additional license, or will that be fine if you are just a broker dealer to actually deal with the digital assets. Within the European Union, it's also been a huge shift, like with the adoption of the MiCAR regulation. And eventually, if you are like a MiFID regulated institution, like a broker, you can like after certain consultations with a regulator, but you actually can provide digital asset services under your MiFID umbrella. And that's the game changer. I mean, every single broker dealer, and there are hundreds of brokers in the European Union, this year they already can start offering crypto under their existing license. And I think most of them don't even realize that. And this opens just a huge opportunity. So I think 25 and 26 will be pivotal years for both US and Europe to have another wave of institutional adoption like all the traditional players. So yeah, we're quite excited.
Of course. And the fact that MiCA was built on the basis and the framework of MiFID,
Exactly.
I think there's a huge benefit for the industry in general, because you can adopt, the traditional banks have the framework developed and they know how to deal with it. We're going to shift gears again a little bit to a sore subject.
Yes.
You and I have traded in electronic markets for a while, and I remember the decimalization process that was happening in the early 2000s, when the commissions for the brokers went down from teens to pennies, and there has been continued race to the bottom in terms of the fees that the brokers can charge for the execution services. The question is, how can we avoid similar trends in the crypto industry? Can we avoid them? And what is the path forward for us?
What also is quite fun when working in the capital markets, because we were working with the most smartest people in the entire industry and the space. And smart people tend to count their fees and commissions. So it's always tough to negotiate, and that's why it basically drives the markets. Basically, it's a race to the button,
right?
Because it's impossible to maintain the same margins. And we already see that, like 5-10 years ago, we can see 10, 20, 30 bips for a Bitcoin. These days, that's just almost impossible. Trading is a quite commoditized business. And if you're offered just the execution part,
right,
I think you just won't be able to maintain the same level of fees and the same level of margins that were possible 5 years ago or even 3 years ago. And that will be continuing, I think. So the question is, what is the added value that you can add on top of just the commoditized offering?
Right.
And this is why we as Finery Markets, we're not just focusing on the matching and the execution part, but we are also providing the pre-trade and post-trade infrastructure with the entire life cycle and the back office features, which can help scale the entire flow. And we know that in traditional asset classes, for every single bit, there is a specific vendor that offers like risk management or like the pre-trade check or like reconciliation features. When we started 5 years ago, there was nothing like that in the space. So we were basically forced to develop all of those bits and pieces ourselves, so that now we can offer a proper full life cycle solution, and that's exactly what our clients appreciate.
Yeah, and I think the fact that you have the matching engine, ECN, as a standalone business versus the SaaS product that you have for the back office, for client onboarding, for the reporting, for the risk management features, I think those two functions are separate, in my view, and they really provide a differentiation. Because just trading itself and just the execution does become commoditized, and the commissions continue to go down and drive fees. So we've witnessed some of the significant changes in electronic trading in general, with the advance of AI, with new algorithmic trading, with gamification, specifically for retail clients. Where do you see the technological advancements going forward? What new things you expect in 2025 on the crypto trading and the crypto market in general?
That's a good question. I think we will see more adoption within the DeFi space. Like, as I mentioned, intent-based DEXs, I think, offer quite a unique blend of protection for the takers, but also some flexibility for the market makers. So we're watching that closely. I think this is a very important trend. It's not like you don't need an AI actually to drive that. But if we talk about some novelties in the like the retail adoption and where AI can play a big role, is definitely on the asset management side and on the algorithmic trading side. So all the different all the largest market makers, they've been playing around with AI for many years. And I think over the last few years, it's also been a renaissance of algorithmic adoption within the AI. Interesting thing to look at as the like with the AI, algorithmic trading becomes quite accessible, so that more and more retail users, like one-man algorithmic trading shops, will appear. and that will just drive overall volume across all the asset classes. I think that like the retail trading will probably be emerging into the kind of algorithmic trading models. So definitely more retail users will be engaged. And with the use of AI, it will just drive overall volumes, which is great for the industry. It's not just for the crypto. I think it will be the trend across all the asset classes.
Right. And I think what was the huge advantage to Finery Markets in general is to have this diversified set of clients. We have payment providers, we have institutional clients, we have this whole gamut of different clients on the asset management side and the non-banking entities and payment providers, again, who are very asynchronous in their views in the market. They're not necessarily all buying Bitcoin when the Bitcoin is going up or vice versa. So I think that kind of created this diversity. And I think when we have the AI-driven models, they potentially might be kind of skewed one way. So that is something that we need to keep an eye on and provide liquidity for.
Yeah, and well, I think regulators are not kind of keeping up with the AI adoption and how this intersects with the capital markets. So I think as soon as we will see more clarity on just the basics of the digital assets trading, like the AI and how it affects the market structure, I think will be something quite important to look at, because I think we'll probably see something like the flash crash within the next few years, but it probably can be the AI-driven event.
Right. And I think the ECN specifically, like Finery Markets and SpotX, having ability to control for that and have the very tight risk management that does not allow the client to surpass the limits that they have, and have the prime broker or master account sort of control the risk of the ecosystem, I think will be super important actually.
Exactly. And I think most of the customers like that we both have should really master with the risk management features. I mean, they should actually invest some time into utilizing all of those features because they were developed for the purpose. And especially for those who are crypto native and probably do not have all the practices and experience of the traditional markets, I think this is our duty to educate them and to actually bring those practices.
Yeah, that's your role as a leader. That's you're driving the changes.
Exactly.
Now, we're going to talk about the risks and the concerns that you might have. Obviously, what keeps you up at night as a founder? We know what keeps us up during the day, the protests that are happening outside in New York. I'm sorry if it's too loud in the cameras, but I think we'll tunnel through it. So what are the biggest risks and challenges that you're facing? What are you thinking about in terms of change technology, and how do you look at the business in general from the risk perspective?
Well, besides my kids, that luckily are like grown enough that I think what really keeps me up is basically just being a founder bears like all sort of different, I would say, interesting matters, like whether it's HR, a regulatory activity, or like just some client use cases that you need to deal with. I think it's just another lifestyle, and I do enjoy that. I think it's just impossible to kind of switch. Actually, I don't know, but for those that retire from being like the CEOs and the founders, I honestly do feel sorry for those people, because like after being in such pace for like several years, I think it's just impossible to switch. You need to have that adrenaline with you, and
good to be young, Konstantin.
Yeah, exactly. I was told that for like over the last 15 years. I hope I will keep that for 15 more. But we'll see. We'll see. I think the industry will be developing, like ever-changing. Capital markets are there forever.
Right.
And regardless whether it's digital assets, whether it's any other form, what I really enjoy about the industry and the capital markets in general, because it's just the human nature, and it will be there forever, like in different shapes and forms. That what really drives me.
Yeah, I can imagine that work-life balance is very different in your case than
yeah, well, of course. I mean, like I all my work-life balance is my my life is my work. I mean, this is precisely true. I mean, I do love my wife and kids. We'll be celebrating 20 years with my wife next year. And thank you. And but I do appreciate that many years ago, she accepted the fact that this is my main passion. Like, I do enjoy working and building in the capital markets, whether I was working in the investment banks or right now with Finery Markets. This is just my main passion is the capital market. So I'm super excited of working in the digital asset space today, because that's the most scalable and the most global problem that you can solve in the capital markets today.
Well, I want to say thank you to your wife for allowing you to work all these crazy hours and travel nonstop and being involved with clients, so forth. Now, what are the biggest opportunities as we come towards the end of the podcast for Finery Markets? Where do you see sort of the next key milestones? What are you aiming for in the near future and maybe longer term?
I have a dream of Finery Markets becoming the AWS of matching engines. So what I see is there's never been a truly global infrastructure that can power matching and execution across the globe. And I think this is exactly what Finery Markets can fit in. And with our ECN as a service product, with our white label product, or you name it, or you can pick any other part of the ECN, I think we can really help and solve the fragmentation issue. And digital assets, this is the most fragmented asset class, so we need to have a solution for that. And Finery Markets bring, I think, one of the most perfect solutions to that issue is basically to power the regional broker, the regional exchange, the regional OTC desk, or a payment company, and that's something that can be solved within the next 5 to 10 years with our help.
Fantastic. Well, as an advisor, as an investor, obviously, I support you and encourage you to continue, and very much love your passion, the excitement that you bring to the market in general, the knowledge that you bring from the traditional finance, the risk management, the execution quality, the highest level of matching engine. And I think that's something that excites me as well. Every time we meet, every time we talk, and I want to wish you a lot of success.
Thank you, Leo. And with your help and with your support, I think it's a double pleasure to build the infrastructure with such great like-minded experts and people like yourself. Thank you.
Well, this is the wrap, and it was The Flow, the podcast on crypto market structure, that we meet with industry leaders and discuss the current state and the future of crypto. If you like the show, please subscribe, and share with your friends and colleagues. And until the next time, thank you so much.
Thank you.